Hi Marvels, I see you early to the stream, so it's nice to have you here, guys. So let me quickly just share the link on Discord so everyone can be updated about the current stream. But I think the music might be a little bit too loud on my side, so I'm just gonna reduce it a tiny little bit. Alright, seems to be much better now. Alright, so yeah, so let me quickly share the link now, and we may begin. Alright, so everything's great. So for today, I have prepared a topic on on breakouts. Have a look at our MetaTrader 5, and as you can see, so unfortunately we are currently in a loss. So yeah, so we are about minus 300 euro for the current month, and yeah, we have some loss on US tech, and currently we are still long BTC USD. So we entered at a very unfortunate time, right? So on the first day we entered, on the first day we had a very big dip, but this doesn't change, any of our analysis. So we're still planning to hold that until the end of the month. So with that, there are no, more trades to discuss. So let's just proceed to today's topic, and yeah. So the idea behind analyzing breakouts is that now in the last stream we have actually created like 3 swing trading strategies that we have scheduled until the end of the year. So actually maybe let me just quickly share with you what we have prepared last week. So so yeah, we made some very simple market analysis, and this is just a quick overview of the current strategies that we are trading. So currently we are trading our US 100 momentum trading bot, which is an intraday strategy. Then we have a BTC USD long setup in October, which is the current trade that is open. So it's this current trade you see here, and yeah, this one's currently in loss. And then we have some S&P 500 long opportunity in November, and then some XAUSD long opportunity in December. So this is a strategy that we've tested in our backtester, and yeah, so this is currently running. All right, so let's just get to our today's topic, and let's analyze some backtests. And maybe I think I have prepared something in the past regarding breakouts. So but let's just quickly summarize what it's going to be about. So trading breakouts, right? Basically are waiting for like a break of support resistance, then you're trying to enter into the direction of the momentum, and the idea and strategy is that when price breaks out of range, it shows some strength in that direction, and you want to follow that momentum. So I usually don't like to paint these, but just so you guys have a rough understanding of what I'm talking about. So here, let's say now you can, let's say we have like some price action inside some range, right? And then this price decides to break out of that range, where this current breakout here is the breakout, and then we would be looking for some opportunity. But the question is, how do we visualize that in Python? Because in Python it's a little bit more difficult to see these patterns, and now we have to be very technical, very mathematical to say what is a breakout and what is not. For example, on this chart, right, we see, for example, consolidation here. You could say that this is a support level. Then you could say, yeah, that it has some high here. right? It's been broken out. And then, you know, there are like these fine, you know, very small details. Is this, for example, peak a breakout, or is it just, you know, touching this level? When is a breakout considered breakout? And this is just, we're just asking the questions, so we can actually, you know, define it in a Python algorithm and say, you know, if that works or not. And then once we have some definition of support and resistances and breakouts, then we can, you know, perform some backtests and see, you know, how profit strategy is. So by the way, guys, one quick moment. It does seem that, sorry, it seems that I had a bad internet connection, so apologies for that. It should be fine now. Right, it should be okay now. So let's continue. And let's open one of our apps that we've made in the past. So if you look in projects, right, and projects, we have something called a backtest simulator. So we are going to use that today to visualize some support and resistances and how these strategies would perform, you know, on historical data. So let me run this app. And now if we open this application and check this out, right? So here we have an app that we've created in the past. It is basically a live visualization platform, you know, to visualize a backtest. So here what you can see is that, you know, you have some live data, you know, being fed into this application, and it is generating trades here. And here you can see, you know, some P&L charts with profits and losses. So this is what we're going to use today to, you know, analyze the breakouts. But first we should get into our Jupyter notebook and, you know, define what support and resistance is. So I can actually close it now, and let's create a new folder for today. So by the way, guys, this folder you can find my GitHub page. So I'm just quickly going to share my GitHub page with you guys, so you can also access the code for those of you who are new on the channel. So here is the link. Okay, so as I said, today we're going to create a new folder, and so we are going into the October folder, and we're going to 2024 10, and today is the 3rd of October. So we're going to create a folder here, and I'm going to create a Jupyter notebook with breakouts. Hello Ganesh, nice to have you on the stream. Glad to have you here. So by the way, Ganesh, thanks. You know, we're today discussing breakouts, as you can see from the title, and we're going to do some backtests and see what we can find. So I'm going to create a Jupyter notebook file, calling it Jupyter breakouts analysis .ipynb. So we're going to add that here. And now the question is, like, let's just test it on a single symbol and then see, you know, if our analysis works fine. Maybe on the German stock index. So I used to trade the German stock index a lot, and I think because it is like a lot of momentum and has low commissions, this is a good way to, you know, start with. And then we can apply the, you know, the analysis on other markets as well, of course. So first thing, we are going to import from ATJ Algo Trading, which is our own, you know, package that we're using, and we're going to use it from backtest folder. We are going to import get OHLC history. So this function will retrieve the historic OHLC data, and it is working with MetaTrader 5. So what we can do is we will also need to import MetaTrader 5. So import MetaTrader 5 as MT5. Ganesh asks how to code this backtest. Is there any video on channel? Sorry, I'm quant training and oh, right, of course. Thank you for a comment and glad you enjoyed the video. I have coded this backtest simulator here in the project's backtest simulator, which you can find on GitHub page, and I will quickly share with you the link to the stream where I was coding this backtest, right? Just give me a second and I will share that file with you. Here it is. Great. All right, so you can check out this link. You can check out this link and just let me know what you think. So everything regarding the backtester is mentioned there. Alright guys, so I'd like to apologize. It seems like, my internet is kind of unstable today. So if there are any outages, very sorry about that, and I'll have a look at it after the stream. Yeah, it's unusual that we are having these outages. So, but as long as it's okay for you guys, that's all that matters to me. Okay, back to backtest. So we want to analyze the backtesting, and what we need to do is we need to call empty5.initialize. And this will connect to our MetaTrader 5 platform. Oh, of course, we need to also import this package here. All right, the import has now been successful. And now what we can do is we can just retrieve some data for the DE40. So our symbol today that we're going to analyze is a German stock index DE40, or it's GIR40, I'm not very sure. Let me just check in the platform, and yes, it's DE40, so that's a German stock index. And we are going to backtest on M15 charts. So the time frame is equal to empty5.timeframe. And we're going to use M15. So we're going to check intraday breakouts on the FM15 candles. And now we're just going to specify some start date times and end date times. And I will also need to import date time in the import. So import, or actually from date time, import date time. And I also import time delta actually. All right, so the start date time here would be date time dot now, and I want it for the past 2 years, so it would be minus time delta minus so days is equal to 365, which is 1 year times 2, so it is for the past 2 years. And the end date time to extract the candles would be the current date time, so I would just specify date time dot now. And now let's just retrieve the OHLC data using this function that we've imported. So OHLC data frame, or OHLC df, is equal to get OHLC history, and here we just have to specify symbol, time frame, right, and this what we're using. And now after calling this, let's run this. And of course I need to import datetime again, so that's my mistake. And now we see that it's working. So we have our open, high, low, and close. All right. So now that we have our OHLC data, let's now try to think about a very simple way to identify highs and lows, or support resistance. And the most simple thing that we can do is we can just measure the highs and lows of the current session or the previous session. So this is something that I like to experiment with. It is very similar to the London breakout strategy that we've been working with, but now we are actually working with highs and lows of each session, right? So here we are going to define highs and lows. So for now, I wouldn't call it support and resistance. I think support and resistance is a term used in price action trading, where you have certain rules about your number of touches, about rejections and so on. But now we're just measuring highs and lows, which is something, a very simple concept, but then we can maybe try to apply it on more sophisticated cases. So yeah, so how do we compute the highs and lows of each session? And that is actually very simple. So what we can do is first we will need to compute the date for each session. And so first we need to compute the date of each session. So we take OHSDF date, and then we take our time column and compute the not the time but the date attribute. So now we run this, and here we see our date computed. So let's just compute the high of the session and the low of the session using this date here. And I'm going to create a new data frame called OHLC, or actually I'm just going to call it high low by session is equal to, and we take our OHLC data frame, and we're going to use a group by operation, group by date, and now we're going to compute, and here we are going to compute the high for the session and the low for the session. So here I call this the column session high is equal to, and we take the high and maximum, and we can take the session low, and then we will compute the low of that session and then the minimum. And now if I print this, and I'm just going to reset the index by saying in the s index is equal false. So what we have now here is that we have created a data frame where we have the highs and lows of each session, as you can see. So for each of this date we have the highs and lows, and now what I want to do is I want to take this data and put it back into the original data frame. And the way to do it is that we simply take our initial data frame, and let's go OHLC-DF2, right? So we're going to create with a new data frame is equal to OHLC-DF, and then we're going to use the merge function where we can, or actually not merge, sorry. Yeah, it's merge, sorry. I was about to write join because join is a function that is used in MySQL, and I used to work with MySQL a lot, but in Pandas it's merge. And we are merging the initial OHLC data frame with the high and low session, and we are merging the data where the column is the same, right? So where the date is the same, and because I computed the date prior here, let me just plug it up here so we can actually see the date data here. So where the date data is the same, we are going to add the data such as session high, session low to that initial data frame. And so now we're computing the session high and session low. Yeah, I forgot to merge it on the date, and now we run this, and let's see what the output of that data frame is. So now we see that we have our open, high, low, close and date, which we have computed here, but we have also added the data such as session high and session low, which was computed using this group by function here. So now we have the session high and session low, and now I'd like to show you what it looks like on a price chart, right? Because we're also interested what it looks like. One moment, I think that I also would like to, let's just plot it and I'll show you. So I think import Yeah, so in ATJ Algo Trading, we also have another function which is called create price fig, and what this function does is it can, accept a data frame as an input, and then it will output a price chart. So what I can do is our figure is equal to create price fig, and we can just input our OHSC data frame 2, and here I can specify, and that is, like, in my opinion, really amazing. It can visualize any data that is being computed here in like session high, session low. So for example, if I want to visualize OHC data overlaid with session high, session low, I can do simple things such as just specifying the column that I want to visualize, such as session high here and session low here. And now if you run this, oh, and again, I forgot to run the import up here. So if I want to create a price figure, here we have our fig, and hopefully we'll see a price chart. As you can see, we can see that. So here's our price chart, and if we zoom in a little bit closer, we see our OHSC data. And here, let me just minimize that. Here we see that the blue line is representing the session high, and the red line is representing session low. So you see that, for example, on September 10th, let's look at this example. The maximum value measured during this session was probably around here at 1 a.m. and this is why we have the maximum for that session. And then we have a low here, so we have a minimum measured for that session here. And so now let's say we want to work with the data. So I think maybe what we can do is we can always check, the previous session high and session low of the previous session and see if, the current or today's price action is somehow reacting to that price level. And that's why, what I wanted to do prior is actually shifted. So let me actually compute a different metric, which is called previous session high and low. So we are checking the session high and low of the previous session, and by doing that we must quickly do something like this. So previous session high is the previous session high, and we need to shift that value by 1, right? So shifting, what it does is that we have our values here and we're shifting that 1 extra to the front by byte, of course. So we are now shifting the values, and that way we can always check what the previous value of the session is. And of course, I'm going to show you what it looks like on a price chart, so we can have an idea, how that would work. So here we have previous session high, and here is previous session low. And now if we look at the price chart, so for example, and this is good. So what you see here is that previous session, like here we have September 17th, and you can see, hopefully you can see the highs here, right? So this is the high of this session, and the blue line here represents the high of that previous session. And then we also have a low somewhere, right? So this low here is the low made around the session here. And so yeah, so now we know what the previous session here is, and the question is now, when price of the current session touches the high and low, how will it react? Will it break through? Will it reject? And this is something that is worth analyzing, because I think this is a good starting point to analyzing support and resistance, right? Jack, glad to see you. Keep going and dropping knowledge, man. I appreciate you. Or no, appreciate you. Thank you for a comment, and I'm so glad to be here. So yeah, thank you for coming to the live stream. And yeah, so today we're just going to continue with our breakouts. Okay. So I think, oh, Paul Dever has joined the channel. Hello, Pavel. Nice to have you here. How's work? All right, so many comments lately. Okay, session highs and lows. So maybe I should just write down what I want to do, right? Because I have so many ideas right now. So first idea, right? And so number one to do. Just do number one. How often does price touch previous session high or low, right? So how many times do we see something like, oh, we have a price, you know, moving up and down, and then we see this kind of spike here. So how often do we touch this level, right? So here it's once, here it's twice, and we're just going to compute a single touch for each session, right? So every session can only have one touch. So we will compute number of touches of the high and number of touches for the low. Then the question is, when it touches, does it break out or reverse, right? So the question is, there's always a, you know, a division of opinions. Price breaks out of support or resistance, it's a breakout. Or no, price breaks out of support, it's a reversal. And the question is, we don't know. Like, at least I don't know until we make some analysis, right? So in this case, we see a price breakout and then it quickly return back. Or would you consider, you know, this little spike here breakout? So we need to define all of that. And so when it touches, does it break out? So we have to define breakout. What's a breakout? Maybe the candle or the next 3 or 4 candles must be above the broken resistance and not return, for example, right? This could be our definition. Same for the support or a reversal. A reversal could be something like, oh, the single candle touches, breaks out, 1 or 2 candle breakout, and then they immediately return back, right? So we could do something like, okay, price can only hover for like 30 minutes, 30 to 60 minutes above that range, and then return, and then we reversal, and then maybe we could be looking for, you know, a reversal trade opportunity. So of course we need to, you know, define, and in programming there's no other way than just trying to define somehow. So define what is a breakout and reversal. So this is another question that we'll be dealing with. And what other questions do we have? I think these are the 3 main questions. And 4, once we are done, find a profitable strategy, backtest it, and code a trading bot. I think this is a pretty good, good plan for today. And hopefully I'll be done by the end of the session, because I don't know what to expect, because, you know, every symbol is different, and this is the exciting part about coding, right? Or more like analyzing, backtesting, you don't know the outcome, and maybe I'll just waste 4 hours of my free time and get nothing. But let's not think about that. Let's just start coding. Number 1, how often does price touch previous session high or low? And I think, you know, what's the best way to do that? So I think we should just check the maximum minimum of the current session and check if that maximum of this session is higher than the maximum of the previous session, and that way we can see if it has been touched. I think this is how we could do it. So to check if the previous session high has been touched or not, we can just go back here to high-low session, and we can compute the current session high and current session low. which is this. And which is this. And because we've shifted the previous session, as you can see, we are shifting by 1. So this is basically the same, but because we are shifting this value by 1, so this is the current session and this is the previous session. So now if we compute that, now we have the current session high and the previous session high. And now we just have to compare if this value is greater than that or not. So to get number 1, right? So this is our question. How often does price touch previous session high or low? So we can take our previous data frame, OHLCDF2, and I will call this touch previous high is equal to, and here I'm going to create a simple function. So I'm going to use apply lambda x. So a lambda function is basically just a function that we are creating and then discarding immediately, just for quick computations. And I will say 1, which is true. If, and now we see that the autocomplete is coming handy. If previous session high, no, so this is not correct. If the current session high is greater than the previous session high, and I should actually do greater or equal. So if the current session high is greater or equal to previous session high, return 1 and it has been touched, otherwise 0. And we're going to use the same for touch previous low. So 1 if current session low is less or equal to the previous session low. And now I think we have computed the thing successfully. So now what happens if we plot that? And actually I think I didn't have to compute it here. I could have computed here, but it's not too late. So because I computed that, doesn't matter. So now let's have a look at cases where, you know, I'm just thinking how to visualize it to you guys so you guys can understand what I'm doing right here. Or I'm just going to explain it. So if the previous high has been touched, right, it will return 1. So basically, if this value here, right, if the high of this candle, for example, is greater than this blue line here, it will return 1, right? So we know that on September 18th, here we have a candle at 2100 that has touched this level here, right? So here we have the touch. Same here. We see that at 1200 on September 17th, the high of this candle breached the previous session high. So it will return 1. And the same applies for lows. So if we look at cases where the low has been breached, and I'll try to find an example. For example, here, we see that the previous session low was right here, right? So here we see a break of this low. So here we see this break, and that's a touch of the previous low. Marble 74, yes, you're right. It's actually better to do that test over group info. And let's do that. Thank you for help. So maybe while I'm doing that, as I mentioned, it's better also to compute over the group info, because then I don't have to compute it over an entire data frame. but I can do it like that, right? So instead of computing, candle by candle, I can also measure touches, for each individual date, because that's the only thing that matters for me currently. But if I wanted to measure it, for the group things, maybe what I could do is measure the first touch, what happens after the first touch. So let me, so one by one, sorry, Marpos24, or just Marpos if that's your name. Let's just plot it and see what it looks like. So I will take the session high, session low. I think I just use a bar chart. Let me import Plotly Express to create a plot. So from plotly.express, or actually import plotly.express as px. I'm going to run that. And now I can create a bar chart. df x is equal to date, y is equal to touch previous high, touch previous low, and this is all I need. And it's not the data frame working with, but it's the high low data frame. Okay, it doesn't look that interesting, the bar chart. That's just the line chart. Maybe it would look nicer. No, it looks the same. But basically what it means is that if you just look at the touch previous high, so it doesn't mean 0, it's a touching, but when it's 1, we know that on September 12th, the price was touched, on 13th, the high was touched, on the 17th, the high was touched. So we see that it has been touched multiple times. Or no, I could theoretically just do some vertical lines to show you exactly when it's been touched. But I think you guys understand the point here, right? So what I want to do now is, so whenever we are touching a certain high and low, right? So we can actually proceed to question number 2, or actually, I haven't even answered question number 1. So we can compute the touches, but I'm actually just interested in the first touch, right? So maybe again, sorry for confusion, but what I'm going to do is I'm going to compute the touches. Martin, okay, nice, I'll remember that. So hi Martin, thanks, nice to meet you. And yeah, hopefully I'll remember the name during my next live stream. I think I will. Okay, so let's just quickly summarize what I've done so far. So in this section, I have computed the touch of the previous high and low with the current session. I don't know when it was touched. I don't know how it was touched. I don't know if, the subsequent price action is going to reverse or not. So what I'm going to change up a little bit is that I'm going to compare every individual candle for the current session if it has touched the current session high or low, right? So I'm going to track, do it like this. I'm going to find the breakout candles. Sam, the comment ad shape on signal chart. What do you mean by that? Are we still talking about visualizing the touches of highs and lows? If yes, we can have a look at it later. Let's proceed just quickly with that. Breakout of high is equal to and I think the best thing to do when it comes to breakouts in this case is if we do a paint, open a paint, right? Let's say that we have a candlestick that looks something like this, right? So this is a candlestick, this is the tail, this is the other tail, and then we have the resistance level, right? Let's draw a red line here. So let's say this is our resistance. And all of you guys know that this thing right here, this coin here is the open price. This is the open price. And this here is the close price, right? You know, it's exactly this level, right? This is so when it comes to touches, we're dealing with highs, which is this one, and then lows, which is this one. But also again, this is our resistance level, and of course, let's assume that this is a bullish candle, right? This open, this is closed. So breakout candle would be categorized as the open being below the resistance and the close being above the resistance. So let's try to find a breakout candle that looks like this, right? And once we have the breakout, then it is our job to analyze if that breakout is successful, if it will continue. So step number one, we have to find this setup for a breakout. And it's actually easy because I just mentioned, okay, the open must be below the resistance and the close must be above resistance. In this case, I'm just the resistance in this case defined as also the previous session high, right? So resistance, previous session high is basically one and the same thing in this case. And so an example, we are looking at this candle, for example. It's a very small candle, but we see that the open is below and the close is above that level. So I'm just going to get breakout high. And maybe I just create a function, so define check breakout. So here we're going to add x as our variable, which will represent a row of our data frame. So if x open, which is the open price of a candle, is greater than x previous session high, and right, x close, must be less, right? Again, our open must be below this level, so must be less. So if x open is less than previous session high and x close is greater than x previous session high, I'm going to return bullish breakout. Hopefully that makes sense. Else if, or elif in Python, x open is greater than previous session low and x close is less than previous session low, then it's a bearish breakout, right? So we are just inverting logic. So we are applying the short or the selling logic, or the bearish logic on this example. Not breakout, bearish breakout. We have a bearish breakout, and so I'm going to apply. So what apply does is it applies a function onto our data frame, and by specifying axis is equal to 1. Axis equal to 1 just tells the apply function that we want to apply the function on row by row basis. So what it basically is doing is that apply iterates the function over each individual row. So this function here, right, as you see, can take any data from each row and it's iterating one by one, and then at the end it will return the value that I need. And now, if you look to the right, hopefully we'll find a breakout, or I am actually just going to check it here. So for example, we have a bearish breakout on the 5th October, right? So let's check it on our chart. Hi Odysseus, nice to have you on stream. Glad to have you here. So October 2022. Let's go searching. October 5th. Still need to go a bit more into the past. So here we have October 5th. And now, let's zoom a little bit closer. So what does our function say? So our data frame tells us that there's a bearish breakout of the previous session low on October 5th at 15:30. So October 5th, and hopefully at 15:30 there is a bearish breakout. So where is 15:30? Here it is. See that? So here we have our support level, and this candle broke below that level. And that's it. So we found our breakouts. And if you don't believe me, let's have a look at another example, maybe a bullish breakout, okay? So on March 12th, 2024 at 1 a.m. Or let's not do 1 a.m. Let's do breakouts, you know, during the main trading session. Or not main, like normal trading session. 1930, June 5th, 2024. We have a bullish breakout. So can we spot it? June 5th. This is July. June 5th is right here. So we see a bearish breakout, but here we have June 5th, and here we see, okay, 14:15, 14:30, June 5th, bullish breakout. But it's saying that there's another breakout. It's not chronologically ordered, so there is another breakout at 19:30. So let's check it if it's also at 19:30, because as I can see at 14:30 there is also a bullish breakout, but also at 19:30 there should also be another breakout. And that's right, because here we see the open and here's the close, right? So this also is true. And you know, for simplicity purposes, let's just analyze the first breakout, right? The first breakout, I think, is the most significant one, and we will filter out any subsequent touches, because then, you know, it breaks here below, then above, then below. Let's just look at the first breakout and nothing else. So how do we actually compute, you know, if it's a first breakout or a second breakout of the day? And I think there's a very elegant way to do it, and maybe let me just do it and I will explain to you how I did it or why I use that solution. Okay, so I'm going to write this task. I'm going to write find the first bullish breakout, bullish or bearish breakout for each day or trading session, right? So this is our current task. So to find the first bullish and bearish breakout for each date, what I'm going to do is I'm going to use cumulative sum of each date to compute that. And what I mean by that is I'm going to create a variable called breakout sequence. I don't know if it's like the correct way to name a variable right now, but let me just call it breakout sequence. And I'm going to do ohscdf.group by date. So I'm going to compute the breakout for each day. And then I'm going to, because now you know why I actually use numbers to compute that, and I do it, as I could use true false, but I have a habit of using numbers because now you can use something like breakout high, cumulative sum, right? So for each day, when there are multiple breakouts, it will now accumulate, and for example, if we have first breakout, second, third breakout, it will be 1, 2, 3, and to get the first breakout, I just need to find where breakout sequence is equal to 1. And to check if it works, oh, it's not breakout high, it's, oh no mistake. So let me do it differently. Now I explained something and I actually made a mistake, so now I failed miserably. So from now on, bullish breakout represents 1. 1 represents bullish breakout. And then -1 is bearish breakout. Okay, so we're using numbers instead. And now because I'm using numbers, I can count them up. Okay, so let's have a look at an example, if it works. So here I want the breakout sequence simply to be greater than 0. So I filter data frame and see, okay. So let's just find an example where I find the breakout sequence is greater than 1 or 2. It doesn't happen often, as I see, that it breaks out. Oh, here, for example. So here we have breakout sequence 1, and here we have breakout sequence 2, right? Or we have multiple, like 1, 2, 3, 4 here. Maybe let's have a look at this one. So April 14th at 3:30 a.m. So let's go to April 14th. Here we are, April 14th. Yeah, now oh yeah, right. I need to use the zoom thingy. April 14th, which is this day here. So at 3:30 we had a breakout high, right? This is the first breakout, because here we see the breakout sequence is 1. This is the first breakout. Then the second breakout happened at 10:15. This is 10:15. This is the second breakout. See that? Boom, second breakout. So we know that this is sequence number 2. And then we had a third breakout on that day, which is 12:15. Bam, another breakout. Hey Sam, do you want to see scatter plots to see signal breakout? I can do that. Let me just finish what I was trying to explain right now. So now I think you now understand that I'm able to identify if it's a first breakout, second, third, fourth breakout. So now we can just focus on the first because yeah, let's just focus on the first, because prices can go up and down, it can get confusing, and I think the more a breakout is being touched and checked and nothing's happening, the more maybe insignificant that level is. And this is just another speculation, and I think it has to be tested, but just to keep it clean and so our strategy is consistent, just checking the first breakout I think is sufficient, and then maybe you can find strategy that works with second, third, and fourth breakouts, and I think that does that would help. And then there's like so much more we can like analyze touches and so on, and even the way we compute these levels. So there's actually so much to discuss, but let's get back to SM. He wanted to see quick scatter plots to see the signal breakout. So I guess I'll just scatter it. If that will make you happy, px.scatter. So we're going to take our high, actually the HSDF. Which one was it? Yeah. It's actually not breakout high, just breakout. Apologies. Or not. Okay, sorry for the delay, I just need to fix something. I'm going to create two separate functions. So I'm going to compute breakout high and low separately, so I can differentiate between those two breakouts. So in check breakout low, so I'm going to do it like this, and I'm going to also add the breakout low like this. Okay, so I just quickly rerun this, and back to SM. So the scatter plots, to find the breakouts. So I can just take this. X is equal to time, Y is equal to breakout high and low. So I can show you. So this is what you wanted, right? So here we see, well, it's just a scatter plot. Change function for break lows. Oh, thank you. I forgot that. Thanks, Martin. And you fixed it. Amazing. Okay, candles, add trace, go scatter. Hey, guys, I feel like you guys are actually, well, of course, have really good inputs, right? And so Hassan would like to visualize these things by adding the traces. Oh yeah, so I see. So do I understand correctly that you want to overlay these signals onto our OHSC chart? So I can do that. Okay, I guess we have enough time. So so we just overlay it, with a scatter plot. Is it fine if we use vertical lines? I think it would, do the same purpose. Or actually, yeah, sorry, I'm getting actually very confused. Sam, you have like very great input, and maybe, you know, what I'm going to do now is I'm going to commit this file to my GitHub. Maybe you can just quickly explain to me what you want, because it's a little bit difficult on stream to understand, you know, to actually code exactly what you need from me. So feel free to do that, and you know, when you're done, you can just, you know, send the Jupyter notebook to my Discord. I can show it on stream to everyone, and then maybe next time I will exactly understand what you mean. So yeah, no offense, but I am actually a little bit confused. So yeah, hopefully you understand. Or mainly, I just want, you know, to finish with these tasks, because right now we're at point number 2 and we still have a long way to go. Looks like today's stream is going to take a little bit longer than expected, because my main goal is not to plot the signals. My main goal is to get a profitable backtest done with a trading bot that will be ready by the end of the day. So hopefully you understand. Right. So now what I'm going to do is I'm going to create a very simple experiment. So let's say the German stock index, right? So the German stock index, and now this is just an idea for a trading strategy, right? So now we're developing trading strategies and we're testing some hypotheses. The German stock index opens at 9 a.m. and the main trading session is until 17:30. Let's say that we, as DAX traders, DAX, German stock index, we want to capture breakouts that happen in the morning, right? Between 8:30, which is, you know, during the pre-market session, or maybe, yeah, between 8 a.m. or 9 a.m. until, for example, lunch, which could be 11, 12. If a breakout happens, I want to see how price will react after first breakout, and we can categorize it by the size of the candle, maybe the breakout strength, and let's start like that. All right. So I'm going to quickly explain strategy that I just mentioned. Analyze first breakout during morning market session on the E40 and check if breakouts are successful or fail. That's our main question now. So we can run a backtest where, for example, so this is the first condition, right? This could be like first condition. If there's a breakout, check the enter into the direction of the trade and check the result based on main session close, right? So which would be 17:00. So maybe I would close the trade at 16:45, right? Like the 15 minutes before so this would be at 16:45. And that's it. So I think we can just actually start with our backtester, or we can still do some, you know, pre-analysis and then run the backtester and try to code the strategy. So I think for each session, I have to compute the opening price at 16:45, right? So, or yeah, so the 16:45 open price would be our reference to exit the trade, and this is what we're going to compare it with. So if we go back to this section here, so here we're computing some data. So to compute the price for each date at 1645, I'm just going to create a variable, a data frame called 1645. So I'm going to take our data frame and I'm just going to filter by time, right? Where time is equal to time 1645 0. I need to import time from date time. So now if I run this, this, we can see that I failed because this time column is a date time column, right? But I'm actually specifying time as in hour, minute, seconds only, right? Without the date specifications. So what I need to do is I need to create another column called time HMS, right? Hour, minute, second is equal to OHLCDF2 dot DT and then dot time. And I forgot to specify the time column here. Hopefully that works. Okay, so we see that here we have time with the date and the time, which is called date time, by the way. And here we just have hour, minute, seconds without the date. And hopefully that will now filter all our prices at 1645, right? So now what we can do is we can try to merge it, right? So we can check the current open price at this level here. So what I'm going to do is the only columns I will need is the time, open, columns. So now we have the time here and the open here. And I'm going to rename this column to time to price at 1645. So it's equal to, I'm going to rename the column of the data frame. So columns is equal, so open, and I'm going to call this price at 1645. And then what we can do is we can take this data here and we can merge that back where the date is equal to that price. So of course for that I will need the date column. This is great. And I'm going to take our OHLC2 data frame, and because I'm merging again, I'm going to call it now OHLCDF3 because I don't want to override the previous data frames. And I'm going to merge that again on the date. And just to show you what I've done, here's the data frame. What I've done here is that I just computed the price, open price, at 1645 for each date. So now when I enter into a breakout trade, I can compute my data frame. Okay, this is the exit price. I can quickly compute, you know, if the breakout is successful or not. Definitely exciting. I see that I have time X because I think I overrode some of the values. Let me just restart the entire app and see how it works. Perfect. Yeah, let's go down. It looks like when I merge, I have duplicate columns and they create this time_x, which I want to get rid of. We see it in OHLCDF2, it is not happening. I think the reason why it is that I have the column time specified twice here. I don't need that. I just need to specify it for a date. So if we run this again, oh, now we see that the X is now gone. And back to my, what I want to explain. So this is the prices at 16:45 for each individual date. So now, if we scroll down, right here, I computed the breakout sequence priors in OHSDF2, so I have to change the sequence so I get all the data, including the breakout sequence that is here. So let's recap. First breakout of the day during the morning market session. Okay. So we're going to create a filter. So I'm going to create a diaphragm of breakouts is equal to HSCDF3, where time HMS is between time 9 a.m. or actually 9:00 until lunch, which is usually 12:00. Okay. So first we have the filter where we have the time between 9 and 12. Theoretically, we could use hour, which I'm going to do because it's mathematically better. So maybe I also want to, teach you guys good coding habits. So the hour, right, is dt.hour. So now we have the hour computed. Let's run everything because we need all the data in our other computations as well. And now down here, instead of time HMS, I can just use hour, right? And I have to specify time, so between 9 and 12. And let's have a look what it looks like. So now we have all the prices between 9 and 12, right? So another thing we need, right, because we're analyzing breakouts, we need to find breakouts where a breakout sequence is 1. So we want the first breakout between 9 and 12. So to get that, we just add and pandas. Or let me just, create neither. So condition number 1 is this. Okay. Condition number 2 is that our breakout sequence, which is the value we computed, must be 1 because that would be the first breakout. Is equal to 1. So it's condition 1 and condition 2. See that? So these are our two conditions. And now we see that over the past 2 years, we've had 91 breakouts such as this, right? Where the breakout sequence is 1. So for example, on October 24th at 9:15, we have a bullish breakout where we close at 12,964. So let's assume that after every breakout, we enter at the close price, right? So when the candle closes, we enter a position, and then when the position is closed, we exit at this price before market close and see what happens. So compute profits based on breakouts. So now we're actually computing profits. So when a breakout happens, and then price profit. So I'm going to create a function, define, calculate profit. Again, using X, which represents the row of each data frame. And if X breakout high is equal to 1. As you know, breakout high and breakout low can never be 1 at the same time. So now we can just differentiate between breakout high and low. So if it's a breakout high, we want to go into a long position. So then our result would be our price at 1645. So this is our exit price minus our close price, you know, at which we enter, right? So this is the value, you know, the hypothetical result if we enter the trade into a long position. And we're going to use the same for breakout low is equal to -1. And then we will return and here we would do the same, or actually this, because now we are in a reverse position, right? So we just have to flip this to get the correct values. And here in this breakout DF, I'm going to compute profit is equal to, where we apply calculate profit function with axis is equal to 1. So now we run this, and here I forgot 1645. Let's run this again. And the problem here is that I'm trying to apply some values, you know, on the data frame of a slice. To remove that, I'm going to create a copy of the data frame, and now the error will no longer appear. And now we see the profits, and I'm excited to see if we're in plus or minus. So cumulative profit is equal to breakout profit dot cumulative sum. And now it's a moment of truth. Px dot line is equal to breakout df. X is equal to time, or I can just use index dot index, and y is equal to our cumulative profit here. So not bad for first try. So we see that we have a very nice profit in the beginning, then it seems to, you know, drop down again, then we have, you know, some rally, you know, to the upside again, and now it's dropping. And here we see that the index is kind of wrong, so let me just I need to reset the index here, so it starts from 0 and 1. Right, so we place 90 trades, 90 trades, and this is the result. So another question is, how do we optimize that? Like this is something, you know, that still needs some work, and we have to look at, you know, anything. But we see that, you know, maybe there is some kind of edge, because the commission tax is really low. You would pay 1 point, or like 1 point per trade. So if we reduce the commissions on this strategy, we would just have to deduct $90. So the net of this would be $360. Well, Anthony, nice to have you on the channel. Glad to have you here, and glad that you like the content. So yeah, so I think I answer questions now, you know, that we've created here. You know, we define now. I think what we should have a look at is maybe categorize each breakout in two different categories, right? Is the candle big? Is the candle small? Is it a bullish breakout? Is it a bearish breakout? What other things do we have? Should we trail the stop loss, right? Trail the stop loss also sounds like an idea. Or should I just, maybe go for some static pips, points, take profit stop loss, whatever it is. Definitely I see, sort of some profitable tendency, right? There is some profitable tendency. So I'm just, now trying to, take all this data, try to process somehow and think of the best solution if we could, use that and create something better than this, because this is just a very, very simple breakout strategy. And I think there is potentially a lot of things that could improve that. And I think what I'm going to start with is the size of the candle. Because if a breakout, right? We have a breakout that can be small, right? Or we can have a breakout that can be very big. So if you see a small candle and breaks out, probably not so significant. If it's a big one, maybe it's better. And this is maybe, my personal opinion, but it could work. Small versus big. So to compute a candle, I'm going to measure the candle size based on the ATR indicator. So ATR, average true range, is basically just a relative metric compared to the market volatility. And computing ATR is not difficult at all. So first, to compute the ATR, or let's start with the range. The range of the candle is equal to OHLC DF high minus OHLC DF low. So the ATR is equal to the range, the rolling, and now we need to compute the ATR based on a rolling average. So we have 15-minute candles. So let me just, 14 is like a common thing. Let's just use 14. No particular reason, it's just common. And take the mean. So now we have the average candle size for past 3 candles, and I also need to shift it by 1. Because we don't know the candle is closed until it's closed, right? So we are actually using the ATR based on the closing prices. So if you see that ATR is 30, it means that your candle on average has a range of 30 points. Hello Mo, I'm doing great. Thank you for coming to the stream. And yeah, it's great to have more people coming. So ATR is, here's the 30-point average. All right, so now that we have the ATR, we need to compute the size of the candle relative to the ATR, right? So if the ATR is high and the candle is high, relatively the candle is normal. But if the ATR is low and the candle size is big, then it's probably a big candle. So the next thing I'm going to do is I'm going to take the current range. So OHLC DF, and I'm going to do it relative candle size. Is it normal, the 344 MTD profit? Well, depends how you define normal, but as you can see, in my recent Bitcoin analysis, maybe I can show it to you guys. In the recent Bitcoin analysis, Martin is right. I have a swing position on Bitcoin. I'm planning to hold this trade for about a month. So The position sizing is 0.1, right? It's something I'm comfortable with, right? So 0.1 basically means I have a position worth of 6,000 US dollars worth of Bitcoin. So if Bitcoin drops 50%, I will lose 3,000 US dollars. And I'm okay with that, right? But if Bitcoin increases 50%, that's a different story. I'm also okay with that. So for me, it is okay. But for you, it always depends on risk management. So I already accept the fact that this position can go minus 50% because crypto is very risky, right? So you can't expect to have, high gains without low risk. So this is essentially a high risk trade, and me myself personally, I have to be ready to lose 1,000, 2,000, maybe in the upcoming month. But I still believe that my analysis has some sort of, I don't know, research, scientific evidence, call it what you want, and I still believe that until the end of the month there is a chance that I'll make a profit. So because it's a swing trade, right? It might go down. If Bitcoin drops, I don't know, maybe to a recent low, to 52k, right? That would mean another drop of 10%, so I would be roughly minus 1,000 US dollars. It's not nice, but you have to accept some risk, right? Or Bitcoin could drop down here, but the volatility is not that high, so I don't think that Bitcoin is likely to drop below 50k until October. And I'm just being very pessimistic, right? I think when it comes to trading, I have like a worst case scenario mindset. Like, what is the worst thing that can happen in trading? And if I'm able to accept the worst outcome that I place as a trader, then I'm okay with it. No stress, no emotions, no hard feelings. Then you can simply focus on the research and keep doing what you're doing. And if this trade doesn't work out, you guys know we still have other trades in, right? We still have our US1 trading bot. It's actually in profit right now, but the position sizing is not that big compared to the swing trade. But we still have some S&P 500 and XUSD trades coming up. So yeah, so I increase the risk. Let's say it is getting more exciting, and yeah, not much to say. That's how trading works. We just sit and wait, and if we have to stare at a red P&L all month, we shall do that. At least one day, if we will be in the green, it will be nice. And worst case, we can start a fresh month in November, right? Okay. Relative candle size. Yes, patience is key in trading. I would agree. Because obviously, I'm not touching that trade for the next 28 days. So all I can do is just watch. And what helps me the most is actually not think about the position. I know that at the end of the month, I will just open the box and see the result. And better than staring at the chart and hoping that price will up, we can do things like backtesting, like today, right? We can do some notebook analysis, find new strategies, evaluate historical trades. So if you're a type of trader who just looks at the chart hoping that staring helps you somehow, then you're wasting your time as a trader. And that's, my personal opinion. I see traders who stare at charts till 5 a.m. and they have to go work at 10 in the morning. So yeah, it can get very addicting in that regard. So relative candle size is equal to range, the current candle range, divided the current ATR. Let's see what we get. And let me just make it nicer. I'm going to round it, right? You just need maybe 2-digit precision. Actually, I don't need to use round pandas. I don't know why I forgot, but pandas allows you to round like this. Round 2 digits. And so I need to add brackets here. So what have I done? Let me explain. If the relative candle size is greater than 1, it means that the current candle size is greater than the average candle size of the past 14 candles, which means the candle is bigger than usual. For example, here, and so on and so on. So now that we have the candle size, we can categorize the breakouts based on if the candle is big or small. So if you look down here, somewhere we also have the relative candle size down here, and we can see that sometimes there's a very big breakout, sometimes there's a super big breakout. For example, this breakout 6.17, right? So this candle in 15 minutes had 74 points, right? Let's have a look at the 24th of November, 10:30 a.m. 24th November. What year? 2022. So 2022 November. And I can see it from here already. So this is a very, very big breakout. Okay. So our strategy apparently after a candle close is supposed to go long after this candle close. So we see that some candles can get very big, like very big. Okay. So instead of computing the P&Ls, let's just work with tables because it's faster. Because now we're going to use group by candle size. So here, we can have again big relative candle sizes or small ones. And I know why this data frame is here because yeah, it's at 10:30. It's fine. So I think I was showing you a wrong candle on the chart, so apologies. But yeah, let's categorize by the relative candle sizes. I think first we need to have a look at the distribution of the candle size, right? So we know how to properly distribute. And I think something on Stack Overflow, just to make sure so I know how to code it correctly. So I think I have a pretty good idea how to do it. So most of these candles, breakout candles, tend to be higher than the average because first of all we are comparing candles with pre-market session and Asian session, so by default the candles already tend to be greater in terms of ATR. But what you can see is that we have it's between 1 and 2, right? And we have 6, then we have 3, 4, 8. So we have normal breakouts and we have big breakouts. And I'm curious to see if, for example, the relative candle size is 2 or less, or 3 or less, and 3 or greater, if that is a potential filter on computing the profits, right? And so I'm going to create a very simple table category, or I can actually do it by integers, I think. So I'm going to create another column here, relative candle size category, or cat in short, and I'm going to take the relative candle size. I'm going to shorten this to rel means relative candle size, and actually let me just convert it into an integer. I type int, right? So we are just rounding it into an integer, and as a result we can do a group by operation, you know, considering treating that value as an integer. So here we have the integer. So now if we do a group by operation, right? So this is, you know, the previous analysis on all candles. We are going to compute the profits based on the relative candle size. So profits by relative candle size is equal to, we take the breakouts df, and here we are grouping by candle category. It's actually relative candle size category. Then we take the profit and we sum it up. And maybe we should also group by, you know, if it's a bullish breakout or bearish breakout, but let's just run this and then we can categorize it into bullish and bearish. Because maybe in the stock market, bullish breakouts or bearish breakouts, you know, act differently, and I think we could also have a look at that. Okay. So what do we see here? And I think it's very interesting, right? And maybe we could use it, you know, to optimize our breakout strategies. Maybe we should also include count, you know, to see how many instances of, you know, the breakouts we have. So I'm just going to use ag, and here I'm going to, you know, the profit is equal to profit sum, and then we need to add the count, and I can actually use the breakout sequence because it's one anyways. So here, breakout sequence. The breakout sequence is nothing to do with, you know, this computation, but I'm just going to use count here. So I'm just going to do it count trades, basically, right? So how many trades have been open? So most breakouts, right, happened between, you know, breakout category 1, 2, and 3, and the big breakouts, right, 4, 4, 3, 1, 3, were in a loss. So we could say that, you know, if the candle is super big, then the breakout might fail because, you know, all the juice has been juiced out during the initial breakout. So it seems like markets tend to reverse. But also we only have 4, 8, 11, 12 instances where this is the case, right? So we have 12 instances where it's reversed, and also we see when the relative category is less than 1. So basically the breakout candle is smaller than the average, then we should disregard it. So maybe to optimize this backtest, let's filter out everything 4 or greater and 0, and let's just run the backtest only where the relative candle size category is between 1 and 3, and maybe we can get a better backtest, right? So this is, you know, actually, you know, this is great data that we have here, and I think it's great because most of the, you know, trades that happened here are in this category, and when we're done we can apply it on the US stock index, maybe. So I'm just going to optimize the backtest, right? Based on with this new chart, relative candle size category between 1, 2, and 3 seems to be the most profitable option. So I'm just going to go up here and I'm going to change something a little bit, or actually, so we don't actually screw with the previous analysis. So here we have some extra data on the breakouts based on the candle size. So breakout DF2 will receive another filter. Right? So it's breakout DF2 where relative size category, or we can just actually just work with the relative candle size. All right, sorry about that. I'm back again. It seems like we disconnected again. Hopefully this is the last disconnect because we're about, to be finished soon. But yeah, very unfortunate today, and hopefully the internet situation will get better over time. So hopefully you guys are still with me, and let's finish, the last thing here. And I think, yeah, today we can't finish a trading bot, but I think we've come a long way, and I think tomorrow we can maybe start coding a trading bot. So now I'm going to create a new breakout DF with the relative candle sizes, where I only look at candle sizes 1, 2, 3. And then I'm going to compute the profits again. So using this, I'm going to do it like this. Oh, I need to use copy again. So here we are just computing profits. And now let's plot the P&L again and see if that helps us somehow. So here, I'm going to compute the profits for breakouts DF2. And let's run this. And I need to change this. And we see that, this curve compared to this curve looks so much nicer. So I think, guys, we have coded a potentially new strategy that we can use on our live accounts on the German stock index, which has a very nice profit curve. So this breakout trend strategy seems to have some potential. And maybe one last filter is to maybe differentiate buy and sell positions, bullish and bearish breakouts, because I do believe that, when something is going up has a different meaning when it's going down, right? And yeah, I think I still have time, right? Yeah, I'm getting a little bit tired on the stream, but maybe I should take my morning coffee. But I think we should be fine. So how do we differentiate buy and sell positions? So first of all, now we have to check if we have to filter, or we don't have to filter actually. Let's go down here with the group by, and here in the group by section we can also group it by relative candle size category, and also we can add if it's a bullish or bearish breakout. So here I'm going to create a new column called breakout type, and that is equal to lambda x by if x, and here we have breakout high is equal to 1, else sell, right? So the thing is, because we filtered, breakout sequence equal to 1, so either breakout high is 1 or breakout low is -1. Never both, so either or. So that way we can check. Oh yeah, I forgot to provide access 1. Access equal to 1. And that way we can check down here. So if we add another filter, or another metric to group by, so this is breakout type, and run this, and I think right, so we buy and we sell. So it seems that there is actually a mistake in this logic here, because I don't have cell types here. So maybe I have potentially made a... So here you see breakout high is always 1, and breakout low is always none. So this is actually pretty bad, because now what I've done is I've only done backtests on buy positions, which is not bad, right? So at least we know that bullish breakouts tend to be good. But somewhere when I define check breakout low, which is here, I wanted to return -1. So maybe I have a mistake in the logic. So if X open is greater than previous session low and greater, yeah, and if X close is less than equal to, or let's just do less than previous session low, we want to return -1. Otherwise it returns nothing. And here we have check breakout low. And now if we compute this, we do see that it actually computes -1. So somewhere maybe with the filters, I have the sequence. Oh, and I see where the problem now is. The problem is that I have only included bullish breakouts, right, in OHLC DF2, which is this one. And what I should have done is I think I should have included bearish ones as well. So let me give me a moment to think about the solution. So OHS DF3 is OHS DF2 merge price at 16.45. And if I check OHS DF3 here, breakout low should still be available. So breakout low is equal to -1 here. So in other words, I feel like it might be possible that there's no breakout low here. Oh, okay guys, so this is actually super interesting. So there is no mistake on my part, and it's good, but it's good that we have checked that, because I believe the reason is that the German stock index was trading so much, because over the past 2 years, there has been mainly only uptrends. If we filter all breakouts between 9 and 12 and only check the first breakout, there have been no bearish breakouts in the past 2 years between 9 and 12. So the stock market was so bullish that in the morning sessions we had no bearish breakouts, and for that reason our analysis only applies to buy orders as of this moment. So what we should do now is maybe try to extend the time frame, maybe to 3 years, see if we find something, or just take the strategy to bullish trades. And I'm not sure if we have 15-minute data with the brokerage, so we'd have to check more in history. But I wouldn't backtest like intraday strategies, you know, for longer than 3 years. And now we see that, you know, we don't have sufficient data on the M15 time frame on the D40. Let's try 2.5 years if that works. And let's see if we find a bearish trade, just to make sure that our app is working. And still, we only have buy orders. And even though we have a little bit more trades, it seems to work even in a 6 month longer time frame. Okay, guys, I think today we did a lot of good work together, and yeah, I have found something very interesting. So I think what this is saying is that we potentially have a new strategy developed. So I think during my next live stream, I'm going to take this analysis here and I'm going to convert that into an actual trading bot, right? So we're going to convert it to a trading bot, then deploy it on our live trading account, and hopefully maybe by the end of the week, we will have another bot in our arsenal that will have this performance. So maybe before we conclude this live stream, let's run a final backtest, right? And the final backtest will be done using our in-house developed backtesting class. By the way, for you guys who want to use that, you can find it on PyPy using pip install ATJ Algo Trading, which is an open source project for algorithmic trading, backtesting, and financial analysis. So from ATJ Algo Trading, .backtester, we will import our backtester. And I'm just going to copy a file from our template just to run our backtest. So for our backtest, we'll need to create an onBar function, right? So basically it's a signal function that will, you know, generate the trades. And then we will need, you know, to run the backtest. So here we just specify the parameters for backtest, and then also just a quick P&L curve to see, you know, how the trades, you know, looking backtest. In which case, this P&L chart should, you know, look similar to this one, because, you know, we are now just generating trades. So we know that we are now just doing buy orders, but we can keep the sell logic in case we have a sell trade. So in our backtester, we're going to trade with volume 1 contract, okay? And we want to make sure that no trades are open. And our signal, what is our signal? Our signal is basically, and we can check it from conditions that we made here, the breakout sequence must be equal to 1. That's a first condition. The hour must be between 9:12, and if it's a buy position, we want to make sure that you know, the breakout is a breakout high, right? So it's a breakout high. So these are 3 conditions, and let me have that here. So first condition is that hour is between 9 and 12. And second condition, the breakout sequence is equal to 1. And last condition, and breakout high is equal to 1. These are conditions. And you know what, I'm just going to skip that because it's long. We have only buy position anyways. So in this backtester, we are trading from 9 to 12. And what's our exit strategy? So our exit strategy, and of course, the problem is that we want to enter into the trade after candle close, and this backtester is using candle open prices. So in our case, we need to use the open prices. The open prices, of that thing. So I'm going to create a signal function here in our data frame. So I will adjust it a little bit. So I'm going to go down here and I'm going to use define get signal. Okay. And here I'm going to add X. And now I'm going to just use this condition here. If this is true, we return 1. And now I just need to remove X. So basically, when we look at our OHLC data frame that we're going to iterate through, which is OHLC DF3. So I'm going to use signal is equal to apply get signal x equal to 1, and then because the signal is delayed by 1 because we're using the close prices, the signal is basically the signal where it's shifted to 1, right? And I can just say this is the signal is equal to buy. So now I've computed a signal like that, and instead of alright, and because we are now working, because now it's no longer panda series, I can't use between. So if X hour is less than 12 and greater than 9, of course greater than equal, greater than equal, and now we run this. So now we have our signal function computed. So let's see if we have some values. Here we have buy signals, and instead of having this long expression here, we can just say if the signal is equal to buy, then we take our symbol volume and we buy, and here we have a very simple close trade logic. So if data time HMS is equal to time 16 45 0, and here I forgot 1 is equal to 16 45 0, we will close the trade. So hopefully, fingers crossed, let's see if that works. So we are trading in the euro currency because the German stock index, we're paying €1 per transaction, and here we are not using OHLCDF but we're using OHLCDF3 as our data source for the backtest. So let's run our backtester and see how the trades are now being generated. So now our backtest is running, trades are being generated. As you can see, it takes a little bit more time than this type of analysis because here I'm generating trades, iterating everything, so it takes a little bit more time. But we still manage to run backtester. So we see we have 101 trades generated in our backtester, and in our previous analysis we had how many? 101, because we have index 0, so we also have 101 trades here. So we see that in our custom analysis in our backtester class we have the same amount of trades, which is a good sign, and we plot the PNL. Yeah, so this is a little bit unfortunate, so I have to check what the reason might be for that. So I need to check discrepancy maybe in the string logic, because I try to simulate this logic and this logic. And I think, yeah, I forgot, because I'm actually simulating this chart here. I forgot to add another thing in our signal function. And the thing is, we wanted to use the relative candle size, right? So the relative candle size must be between 1 and 3. So we have to add that into our signal function, and x relative candle size is less than equal to 3 and greater than equal to 1. So if we run this again, hopefully we now get a better looking backtest. And I always get mini heart attacks when I see that, because you always expect something and then suddenly your profitable strategy doesn't profit anymore, and then you just want to start crying. But then you find a mistake and everything's good again. So everything's good. Hopefully we have one more chance to fix this. So our trades are being generated, and let's see. And we see that even our backtester class that we've written has the same results as our analysis. So we have double confirmation that this strategy has a little potential. And tomorrow, I believe that it's a perfect time to live stream how I will code the trading bot. So if you guys are available tomorrow, I think I'll be streaming around the same time, between 1 and 2 p.m. afternoon. So sorry about, because I have, also other things that I have to do in the background with my company. So around 1 or 2 p.m. tomorrow in the afternoon, I will be streaming how I will code the trading bot. And if we finish tomorrow, maybe on Monday, we can connect this trading bot live on our trading account and then have another trading bot that, we can trade with. So that is great. So yeah, so thank you everyone who joined my live stream today. It was a lot of fun coding that. I myself, am very happy with the results, because I don't know what I could have expected. And it's great to see you guys also interacting with the chat, so that is also great. So yeah, take care guys, and see you tomorrow if you have time. Yeah, so goodbye.